All right. Good evening, all of you. So let's continue our syllabus from where we stopped. So now let's assume I want to bring in gold and I want to trade gold. This is gold. Gold is XAU USD. XAU USD. That's how gold is represented on the chart. XAU USD. Then I want to show my chart. Then I have something like this. So when I have something like this, if you are launching your instrument and then you see your screen like this, how do you take it to look like the one I've been showing you previously in the previous classes? How do you create a template? So what do? If you're working on a computer, you will right click, then you come to property is the lowest of these on this chart. You click on you click on property here, and it takes you to this. You quickly go straight to the colors. Then we want to select the color too so that we can have a better interface for our chart. So here under scheme, you select you select color on white. Then under background, your background is supposed to be white. You select white on your background. Then your foreground will be black. Then your grid, for me, before I used to use gray, but now I use plain white because I don't want to see anything on my background. Then my bar up is black, my bar down is black. My bull candle, that means the candle that represents the market is moving in the upside, is green. I usually choose green. I use green. Then my bear candle is red. Bear candle is red. Then my line chart is black. Then the volume, I think my volume, all these other ones is left to you, but the main one are the one I've just spoken about. I can choose my volume can be maybe red, my bid line is green, my axe line is also red, my axe line is red. Then all these one can be red also. And my stop loss is red. Sorry, my last price line is green. Then I just click OK. See what is going to happen as soon as I click OK. See, as I click OK, my chart has become like this. And I like to have this on my, I like my chart to be represented like this, naked, nothing you are seeing anything on the background, and I love it this way. And so let me just take you to so this is what we call the candlesticks. This is what we use to analyze our market. It's called the candlesticks. And then if you are not using candlestick, if you are click here now, it will become line. Before the invention of candlestick, this is what people were using to analyze the market. This is what they were using to analyze the market. And after that one, they came to the bar charts. To the bar chart looks like it. But at the moment now, currently now, candlestick is the most informative, most detailed price representation as a chart. And then I have my time frame here. On my left, I have my time frame. You also have it if you are using your mobile phone. So I have it here. I have my time frame. This is, if I click here, this is M1 means 1 minute. It means each of these candles takes 60 seconds to form. Each of these candles is taking 60 seconds. So this is 5 minutes. That means it takes 5 minutes for each of these candles to form. So whatever you are seeing here is the price movement for 5 minutes. Each of these candles is taking 5 minutes to form. Then I have the M15. M15 shows that each of these candle is taking 15 minutes to form. Then I also have M30, which is taking this is taking 30 minutes for each of these candle to be formed. Then I have my H1. H1 means 1 hour. I mean, each of these candle is taking 1 hour to be formed. Then I have my H4, that's 4 hours to be formed. Then daily time frame. That means each of these candle is taking 24 hours to be formed. 24 hours to be formed. Then I have my weekly time frame. Then we have the monthly time frame. Look at it now. Each of these candle is taking 1 month to be formed. So let's get back to maybe 1 hour, or let's get back to 15 minutes. So that's how candlestick. So, and this candle is always moving. If we check like this now, if you see that this thing is still moving, the price is 428, 4824.71. So you can see that this thing is moving. So the candle is always moving like that. Now market opens on Sunday, as Nigerian time around 10:30 p.m. and then it closes on Friday at about the same time on Friday. So that is the forex market for you. But I told you to open derivative synthetic accounts. Over there now, we'll be trading synthetic indices that run 24/7. It runs from Monday to Sunday. It does not stop. It doesn't have public holidays. It does not observe holiday. There is synthetic indices. That's why I said all of you should open a derivative account and open an HFM account, and so that you can have access to trade derivative synthetic indices also, and be able to trade even on weekends, So this is how these tools look like. If you look at this particular one now, this tool on my right now is the pick tool. You just use it to select, use it to pick something. Is the pick tool. Then we have this crosshair, the crosshair. I use it to know the number of pips. Okay, so if you click the crosshair, this only happen when you're using computer. If you click the crosshair here and you hold and press, you hold and move, it will be telling you the number of candle as you are going, as you are passing it will be counting the number of candle as you are moving your hand. Then it will also be showing you the number of pips. So now, from where I drag it from to where I stop now, it's telling me I have 17 candles that have passed. And if you count it physically with your finger, you'll be able to read 17 candles. Then you see another thing at the right. Okay, you see 4392 points. 4392 point. That point tells you, um, if you divide a point by 10, it gives the number of pips. Somebody was asking me in the afternoon, pips. Pips is spelled P-I-P, not P-E-P. P-I-P. P-I-P. Now, plural, P-I-P-S, pips. So now you have point. Now you have 4392 point, which actually means 439 pips. You divide the point by 10 to give the number of pips. So this is 439 pips. So that's how to use that tool. Then you have this horizontal tool like this that you can use to, like, all of these tools are supposed to help you to analyze the market. They also help you to analyze the market. Then you can delete them on the keyboard. Then you also have this horizontal tool. You have the horizontal tool. You have the horizontal tool, which can help you to. All of these tools are used to help you analyze the market. Then you also have the trend line. The trend line, that one draws diagonally. It draws diagonally. It can draw diagonally. It can draw from up to down or from down to up. Then we have this parallel line. You have this parallel line to draw a to draw channel. We call it channel. We're going to be talking about one in the course of our teaching. We have this channel. Then we have the Fibonacci. I love this. We have the Fibonacci retracement levels. Okay, Fibonacci retracement level. This is the tool, and all of these levels have their significance, which we're going to be talking about in the course of our teachings. And so we have this as text, where you can text whatever you want. Okay, we have Apicts Forex training. Apicts Forex training. You click OK, it inserts, and then you have seen me using this in 2 or 3 teachings ago. I was using it to mark point 1, point 2, P1, P2, T1, T2, and that is how those tools work. That's how those tools work. You also, at the top here, you also have your zoom in. This is zoom out. Then this is zoom in. You can zoom in, you can zoom out, you can zoom in, and you can get to the end of your chart here. And new order is where you enter your trade. You click on it, you put your volume, that's your lot size, you put your stop loss, then you put your take profit, then you click whether you are buying or you are selling, and that is that. So, and then you have these other tools here. So this is where you log in your account. For example, for those of you that have opened accounts, they've sent you login details in your email. And if you want to trade on the computer, you open the email. Let me tell you the easiest way to get that job done. Open your email on that same computer. log into your the details that the broker sent to you. You'll be able to see uh, how to download the MetaTrader directly from your account that you log in on your email. Download the MetaTrader 5, especially. I told you to use 5. Download MetaTrader 5, and then you come here, you click log into trade account. When you click log into trade account, put the login number that the broker has given to you, put your password, select the server that the broker has given to you, then you click OK. Then it will launch you in like this. So you have your account on your computer, okay, or on your monitor. So on your computer, on your laptop, on your desktop, you know. And that's actually the same way you log in on your mobile device too. But right now I'm using computer. I'm using that one to explain to you. Okay, so and then you can here, if you click on file, you see login, you click on view. If you click on view here now, you make sure all these tools are checked. Make sure you check standard, you check line studies, you check time frame, you check status bar, you check chat bar, then you also check the toolbox. Also check this toolbox. Every other thing you may not need them. Then you want to insert, if for example, if I want to insert shape now, yesterday you saw I was drawing something like this. Okay, I was doing something like this. I was doing something like that. I can edit it. I can change this color from dark gray to orange, or to gold color like this. Okay, so these are the tools. These are tools. Insert object. I will go to object for now. I'll get to I'll get to other ones later. So usually this is the only shape I use here: rectangle, rectangle, and like that, like that, like that, like that. And I can double it by pressing the control on my computer and drag it. Then it will duplicate. Press control on my computer and drag it and drag it. And just drag it and just drag it. So that's how uh that's how the tools are working. Let's delete them. Okay, so we have it that way. I then so now let's get to the moving averages again. And I was trying to show you yesterday, but network was not very, very good. So let's do it again. So I want to insert the moving average. I told you, when the market is trending, you can actually trade it using moving averages. Moving average can help you to, it saves you from doing a lot of thinking and analyzing. Just follow whatever moving average is showing you, then you can make profits doing it if you stay consistent with it and you do it very carefully. So come to insert, then I click indicator. When I insert indicator, then click on trend, then click on moving average. On moving average, I have my parameters. On the first period, I'm going to be putting 10. Then exponential apply to is close. Then I put my red color, which is the color for my moving average 10. Okay, just like I put it here now. 10 is red, 550 is blue, 200 is black. So let's get back to the chart. And so I come to insert again, indicator, trend, moving average. This time around, my period is 50. Exponential, apply to close. Then this time around, my color is blue. Then I click OK. OK, instantly is bringing me the blue color. Then I come again, I said insert, because I want to do the third moving average. Sorry, insert indicator, trend, moving average. And this time around, I'm using 200. And the 200, I have my color to be black. So I have the red color, I have the blue color, and I have the black color. And so the rule says, let's check the rules again. The rule says when the red line crosses the blue line from down up, buy. Let's go back to the chart. When the red line crosses the blue line from down up, buy. It has crossed the blue line from down up. I'm going to be buying here. I'll be buying here. It has crossed the red line. The red line has crossed the blue line from down up. I'll be buying here. Imagine, see the kind of profit I'll be making. See the kind of profit I'll be making. And so let's take it back again. Let's take it back. When it crosses from the down up, look at it from down up. I'm going to be buying from I'll be buying it. Red line has crossed the blue line from down up. I'll be buying. Red line has crossed the blue line from down up. I'll be buying. Red line has crossed the blue line from down up. I'll be buying. Look at this. Remarkably. It has come from down up, I'll be buying. From down up, I'll be buying. So every time I see the red line crossing the blue line from down up, I will buy. Then cross from red line cross blue line from down up, I will buy. That is rule one. Rule two. Rule two is this. Rule two. When the red line cross the blue line from up down, I sell. From up down, I sell. So let's go there. When it crosses the blue line from up down, when the red line crosses the blue line from up down, I will sell. When it crosses the blue line from up down, I will sell. When it crosses the blue line from up down, I will sell. You can see when the red line is crossing the blue line from up down, I will sell. Crossing the blue line from up down, I will sell. So now the moving averages, it's beautiful. Okay, let's get to the third rules. When the red and the blue line cross the black line from down up, is a strong buy. I used to call it buy, strong buy. It usually move very massively. When the red and the blue line cross the black line from down up, I will buy. So let's check it again. The red and the blue line, look at it. The red and the blue line, they have crossed the black line from down up. You can see the massive buy. You can see the massive buy. Massive buy. When the red and the blue line cross the black line from up down, sell. You can see it also goes down, but not so massively. So let's check it again at the back. Okay, or you check it on another instrument. See, look at it now. The red line and the blue line, they have crosses the, okay, this is from up down, sell. When they cross from down up, when both of them cross from the down up, from down up, okay, when they cross from down up, when both of them cross from down up, that's red line and the blue line, they have crossed the black line from down up. From down up, you can see the massive, the thing is still going up massively, when the red and the blue line cross the black line from down up, look at it, they have crossed the black line from down up. See the massive buy, it still continue to buy. So this is what I want you to study. And then the last one is when the red line and the blue line cross the black line from up down, is a strong sell. That's what I want you to see in that place. Now, one of the things I used to do that could also save me a little bit more. Now, if you have drawn this thing now, you can now save. You can right click like this. You go to template, then you save template. Me, I already saved it before, especially when I was in the last class I was teaching. I already saved it. So that next time when you launch into another instrument, you can just go there, pick it, look at it now, look at EMA class 2025, look at how I saved it. So it's just like this. So when the red and the black and the blue line cross the black line from up down, look at it, I will sell. From up down, look at the massive sell. Look at the massive sell. And again, when both of them cross from down up, is a buy. When both of them come from up down, is a sell. When both of them, look at it here now, when they cross from up down, okay, from up down, look at it. When the red and the blue line cross the black line from up down, is a massive sell. Look at it, massive sell. See how it is selling so massively. It's amazing. You will love it. But this only advisably used. You're advised to use EMA cross on trending market. When the market is trending, it is sweet to use. It is not advisable to use moving average when the market is ranging. When the market is ranging, it has a downside. It will not work effectively well when the market is ranging. So make sure that you practice it, you back test it. So go back to all the instruments, try it on gold, try it on synthetic indices. Let me put it on GBP USD. Let's see how it goes. Okay, so when the red line cross the blue line from up down, sell. From down up, buy. From up down, sell. From down up, buy. This can make you a lot of money if you can sit down and study. This is not how I trade now, but this is how I started to trade many years ago. My first set of profit from the market was made using this same strategy that I'm showing you this night. So when you just use this crossing moving average, When the red line is crossing the blue line from down up, I'm going to be buying. When it cross from the when it cross the blue line from up down. So even when you lose money, you will definitely going to make it back, because you see when the market is ranging, you're not going to make money using these instrument. When the market is just consolidating, when it's a ranging market, I've taught to ranging market. Like here now, look at it now. Look at here now. Market is ranging for the entirety of this place. Market is ranging like this. You can imagine this. You can imagine what is happening in the entire space here. So if you're not careful in this kind of market now, you'll have been losing money. You have been losing money. As it's buying, as he's selling, he's buying, he's selling. Why? Because market is ranging. But as soon as the ranging market was completed, it started trending again, and then it started making money again, start making money again. So that's what I plan to show you tonight. I'll continue again in the next class. Thank